Other examples on double entry, how to apply double entry principle. That is, you debit your giver, no, you debit your receiver, the receiving account, then you credit your giving account. So, and then another principle is that a transaction will always give rise to two entries. So anytime you have to, all our accounts, all the accounting system we have, we use double entry principle in keeping our record, in posting our transactions away together. Anywhere you get to, whether in practice or in theoretical, we make use of double entry principle. That is, uh, you debit your receiving account and you credit your giving account. And then every transaction must give rise to what? Must give rise to two entries. You debit one, then you credit one, or you credit one, then you debit the other. Then another thing is that for every debit entry you have for a particular transaction, you must have a credit entry for it in another account and wait together. Likewise, when you have a credit entry for a particular transaction, your next expectation should be debit entry in another account for the same transaction. Now, depreciation is a transaction on its own. So to we need we need two um two entries. So the first entry we need is the depreciation account. You open a depreciation account by debiting your depreciation. Depreciation is a loss, is a gradual loss on the value of your asset over the estimated useful life of the asset. You are reducing due to wear and tear, due to obsolescence or anything. Your assets must depreciate because you can't compare how the value of your phone when it was when it was purchased with the value you have on it now. So because of time stuff, the value on your phone has reduced. So it is expected that estimated useful life on your phone will actually what? Will actually reduce. You can't compare the value you purchased your phone last year. Let's assume last year January you purchased your phone and you've used that phone for 1 year. The same working pace, your phone cannot work the same. The value you have then when it was new, if you are to sell it, cannot be the same value that you are to sell it now. Something has happened. Are we together? Are we together? So now the first thing you need to open is your depreciation account. Then you credit your what? Accumulated depreciation account. Like I said, for every transaction. Now, at the beginning of the period, that's when you debit depreciation account. Then at the end of the period, at the year end, then you now what? You credit your POL account. Then you debit your POL as an expense. Then you credit your depreciation account in order to write off depreciation account for that period. Are we together? So that's about that. Now we have a question here. They said on January 1, 2018, Bragado Limited purchased equipment for only 800,000 naira. It is the policy of the company to depreciate all its assets at 20% per annum using redundancy method. What's redundancy method? You know we've talked about this. What's the redundancy method?
Reducing balance.
That is our reducing balance method. So it is you apply the 20% on your carrying amount and we together. So number one, they said we should open an account for a ledger for equipment account for this period of time from 2018 till 2022. Then accumulated depreciation expense account, then statement of profit or loss for those years, then statement of financial position for those years. It is very, very simple and easy. So, so the first thing we need to look at, we prepare this kind of table. What's the name of the company? Bragado, Bragado Limited. Abi? So, year 2018, the cost slash carrying amount is how much? How much is our cost and cost 800,000 leave. And we have to apply what's the depreciation rate? 20%. So depreciation for the year will be 800 times 20%. How much do we have? Accumulated depreciation for the year will still be this because this is the first year. Abi, this is the first year. Then uh carrying amount is this, the cost minus depreciation charge for the year. So we have 640. And we together. So that's for the first year. Then we also look for the following year. So this is 40 is coming here and we together. So now we carry this is 40 here. This one coming. There's an error here. So so what's 20% of 640? Hello? 20% of 640. 20% of 640, please. Are you there? 20% of 640. Hello?
1280.
So we have 128. Now, 128 plus 160 is, is this. So we have 288. Abi. Then our carrying value is, you can do it in two ways. Um, 800 minus 288, it gives you how much? 800 minus 288.
512,000.
How much? This minus this. 512. Abi. So you apply your five here. So 20% of your five 512. How much is that? So what's 20% of 512? What's 20% of 512?
102,400.
We have 102. So addition of our accumulated profit with this. What do we have? Accumulated depreciation plus this. What do we have? Plus the current depreciation value. What is our value? $288,000 plus 102,400. What do you have? What do you have?
390.
What do you have? 288,000 naira plus.
390.
So we have 390,400. Abi, so we then say 390,400 minus from take 390,400 from 800. What do you have? What do you have? What is your value? So what's your value?
409,600.
Hmm? 390, take 390 from or 512, 512,000 minus 102.
409,600.
Okay, 409,600. So 40,600, 600. 20% of it. What's 20% of 409,600? What's 20%? What is 20% of 20% of 409,600? Oh yeah, pick your calculator and give me the value.
81,920.
Okay, so we have 81,920. So you add them together. 'Abi? Then at the end of the period, you have 800 minus this. What do you have? Minus 472,320. What do you have? What do you have? Bro? What is your value? What do you have? Oh yeah, now 800 minus 472,320.
327,680.
So we have 327,660. Okay. Can you see my screen?
No.
I hope you can see my screen from your side.
No.
Let me log out from my system here and come back.
Okay. Can you see my screen? Can you view my screen?
I can see it.
Okay. Thank you. So then now this will be our new carrying value. 20% of it. What's 20% of 327,680? 20% of 3. What's 20% of?
65,536.
So we have 65,536. So accumulated depreciation will be the accumulated depreciation um plus this. What do you have? 65,536 plus 472,320. What is your value? What do you have? So what's your value? Hello? 65,536 naira plus 472,320 lei. What is your value?
537,000.
Okay. So our carrying value at the end of the period will be how much? So that's 800 plus 537. This, what do you have? What do you have?
262,000.
So 262,144 it is our carrying value at the end of the period. Are we together? So the next thing we need here is what? We need to prepare our depreciation our asset account. That's which asset are we depreciating? Which asset are we depreciating? That's equipment account. Abi, equipment account. Then go and pick your ledger head. You draw your ledger head. You know how to draw your ledger. Is either you can either use just T format, just draw your T, then debit credit, or it's not compulsory you make your ledger like this. But because I'm using this thing, I will prefer that you use. Let me teach you a method that you can use. I believe you know this method, Sha. There is a particular method I want to teach you. Uh, the way you draw it on your book is different from the way this thing will be. Uh, I want to take a method. Okay, you know what? I will draw the stuff for you. Then I will send you the snapshot. So without wasting much of our time, let's go. So pick your how the fastest ledger method you can use that won't waste your time. Just draw your T format. Then so let's pick our T here. Do we have any T format here? Our ledger format. So we'll start with depreciation account. So what's the date? So we start with one. It was purchased 1/1/2018. So we have how did we purchase this? Let's just use let's make use of our cash. How much? 800 123. Leave. Let your leave be here. Are we together? So at the end of the period, which is at the end of the year, we have 31/12/2018. So we have I'm coming. So we have balance. So we don't need this very much. So what is our balance at the end of the period? 800 Are we together? Are you getting it? So 2011 2019 we have balance wrote down. Abi, how much? It will still be 800,000 naira. At the end of the period, we have how much? Then the following period, the same thing. Are you getting it? Are you getting it? Hello? I hope you are getting it, please.
Yes, I am.
Okay. So the same thing applies here. This 31, 12. So the next day, which is here, twenty 21. So you do the same thing. Your own is just to be carrying the 800,000 naira from year to year. Are we together? Your own is just to be carrying it year in, year out. 2021. So the next thing, the next date, which is the last date, are you getting it? So any question? So what's the next ledger we need to? This one is depreciation, not karamo. Depreciation, no, equipment account. Equipment account. Hope you understand that. Do you understand?
Yes.
Do you understand? So the next thing is to what? Open our depreciation account. We do the same thing. So we say depreciation. So here we now input our yearly depreciation. Now, depreciation we have a debit balance. So you just put your 2018 year, then you tell us we are taking this to um that's okay. We are taking this to accumulated depreciation account. Accumulated depreciation. Are we together? So how much is our depreciation for 2018 year? Based on our calculation, we have 160, abi? Hello?
Yes, 160.
So you bring your 160 here. Then that same 2018, then you transfer it to your P or L. Transfer it to your P, profit or loss. So which will be this? Yeah, we are done for that period. Then the next thing is 2019. What's our depreciation for 2019? Then you put your accumulated depreciation here. Then you say our depreciation for the period is this, abi, 128,000 naira. Abi, are we together? Then we transfer this to P or L. Are we getting it? Are you getting it? Hello?
Yes.
Okay. So the next thing we do right now, this one is going to P or L as usual. You'll copy this. So we'll do the same thing 2020, 2021, 2022. So let's make this 31st and come here at the end of the period because we calculate depreciation at the end of the period. So that what we are preparing will be and come here. We calculate depreciation at the end of the period. Are we together? Except if you are being if you are being told to calculate it at the beginning of the period, but it's not is being calculated at the end of the period. So for 2020, what is the value we have? We have 10 to 400. Abi, Abi. Oh yeah, let's talk. Oh, we have 10 to 400. Are you there? So we have 10 to 400. Then we transfer this to POL. Then 10 to 400. For 2021, are you there? 2021, we have this. Twenty 2022, we have this. Abi. So you just do your copy and paste. So accumulated depreciation. Our accumulated depreciation, we always start on from the credit side. So we say accumulated depreciation. Just bring your head the head here. Then accumulated depreciation. So this date also just carry this first. This date also will be here. So we have depreciation. So this one is going to depreciation. With how much? 160,000 naira. Are you getting it? So now instead of so we now do what? We say we come here. We now say balance because we have to carry all this one over and over. Balance carry down 160,000 naira. That's for the first year. So you now come here. Let's close our account. Shun, shun. Then we come here one. The next day 1/1/2019. Balance brought down. So depreciation for the next period is how much? Hello? Hello? Are you there?
Yes, I'm okay.
Okay. So depreciation for the next period, you just bring your date here. Farm depreciation is going to depreciation account. Then how much? 128,000. So you add together. And weigh together. So your balance carry down will be here. And weigh together. So you close your account. The following day, is 2020, Abi. So we have this. As usual, Abi. So what's the depreciation value for the following year? For 2020. Depreciation value for 2020 is how much? Depreciation value for 2020 is how much? Are you there? Depreciation value for 2020,
200.
we have how much? How much is it? I need your response. So we have 102,400, Abi. So we add it again. So add 228,000 plus 102,400. How much is that? How much is that? 228,000 plus 104. How much is that? How much is that? Oh, how much is that? Oh yeah, pick your calculator and calculate. You are not using Excel when you get to exam hall. So how much is that? I need your response, please. Are you there? How much is that? Oh, I need your response. Hello? I can't hear you. Hello? I want to know if we are together. Hello?
I'm with you. What are you
Then
doing with that
answer
class?
me. I said 228,000 naira plus 102,400. How much is that? It's not that I can't calculate it directly from here, but I want us to be on the same page so that when
Three
you are
ninety
when you
four
are
hundred.
seeing it, yeah, how much is that? I can't
Three
hear
ninety.
you. Okay, 390,400. Okay, so your 390,400, you carry it here as your balance carry down. Abi, I need your response, please. So your balance carry down at the end of the period is this. So 2020. Are we together? You make sure the two sides are equal. Then cover this. Cover this. Are we together? So your balance brought down will be here. 2021. Then we have this. So what is the depreciation value for the coming year? For 2021? Depreciation value for 2021, please. Depreciation value based on what we've calculated. Our depreciation value. What is our depreciation value? Hello? Our depreciation value for 2020, 20,
It's 1,920.
that's 81,920. Thank you. So we'll pick this. Abi, take this one to one. So what is our total? 81,920 um plus three 390,400. How much is that? How much is that, please? How much? How much you? 390,400 plus 81,920. How much is that?
472,320.
472,320. Thank you. So we have a balance carried down. Abi, as usual, 2021. Then these amounts. Are you getting it? Close your having your total. Then the following period, which is 2022, two, we bring this in. Then so what's our depreciation rate for 2022? What is our depreciation value rather? Depreciation value for 2022.
65,500.
So we have 65,000. Abi. So add it together. Add it together. What do you have?
537,850.
So we have 537,850. 537,856. So you bring your value here. The balance carry down. Abi. This. Do you understand? So that this 2022. So that is our. Now we're being told to prepare statement of profit or loss. So we prepare a statement, or we say statements Statements of profit or loss. So you can just have your statement of profit or loss like this. So you say 2018 please I'm coming. I don't know what is happening. Okay. So when it comes to POL, so we say depreciation. You know, we've credited our depreciation account. We've credited our depreciation account. So what's depreciation for the first year? So not to waste our time, you can just carry this. Just carry everything. We'll just change it. Okay. Just carry everything like this. We've calculated everything already. In order not to waste our time. Then place it here. 2018, 2019, Abi, 2020, 21, then 22. I hope it's clear. So, statement of financial position. So just so we need two information. We need the cost of the assets, three information, and just so we need cost of the assets, our costs, accumulated depreciation, then carrying amounts. Carrying amounts. Abi, so I'm coming.
So we have equipment here. So you know your this thing has been constant. Put it like this. Then your cost is 800. Then accumulated depreciation. You know the first year it will be how much? 160. 1, 2, 3. Second year it will be how much is the how much will our accumulated depreciation do we have as do we have for our accumulated depreciation the second year? That will be 160 plus 128. That's how much. Just come here. We have 228. Abi. The next one, accumulated depreciation. The next accumulated depreciation will be 390 400. Are you getting it? 390 400. The next one will be what, how much? Are we together? 472. The last one will be so it will just be this minus this. So you bring it down. That's all that is required. Very simple. Any question? Any question? Hello?
No question.
So now let's look at the disposal of our non-current assets. In a situation whereby we now disposed of our non-current assets. So how do we account for it? So it is very, very simple. We've prepared our this thing, our um equipment accounts. What the three things needed, the three accounts needed is number one, equipment account, number two, accumulated depreciation account, then the next one is the equipment disposal account. Are we together? Equipment disposal account will be the next thing. So you know, as at 1/1/2023, we will have a balance carried down, brought down to still be this, yes or no? Yes or yes? Are you there? I need your response, please. It will still be what? It will still be 800,000 naira. So we now transfer this to equipment disposal account. So we now say the second day, let's say 2/1/2023, we transfer this because we've been told that the asset has been what? Disposed of. We now say disposal account. 800. Are we together? We've closed the equipment account because the account has been what? Has been sold off. Then we come here, our accumulated depreciation account. Come here. So, you know what will be our balance carry down? Our balance carry down here for 2023 how much will be this? Abi? They will now transfer this to, they will say, then we say 121. Are you getting it? Then you write it off. Phew. Are we together? That one has case closed. So you close all your accounts. Case closed. Then you now open your asset disposal account. Now let's now assume our sales proceed from our this thing from the assets is 300,000 naira. You know, we've credited our equipment account. The corresponding entry is coming to the debit side of our disposal account. So we say 1, let's say 23, 21, 2023. Equipment, this is coming from equipment. Abi, how much? 800,000 naira. Then the same day, we are to transfer from our accumulated depreciation account, in which we've debited our accumulated depreciation account. Then corresponding entry is coming to your disposal account, which is the credit side of your disposal account. So we now say disposal, we say the same day accumulated depreciation. How much? How much is our accumulated depreciation? How much are we bringing from our accumulated depreciation? So we are bringing this. Now we've actually sold, the asset has been sold out. When we sell it out, what do we receive? When we sell the asset out, what do we receive? When you make a sales, what do you what you make a cash sales? What do you receive in return? You give out your equipment, then you receive something in return. What do you receive in return? I need your listing. What do you receive in return? Oh yeah, let's talk. Oh. Hello. What do you receive in return? Cash sales. Cash this thing.
Cash.
We receive cash. So you will debit your what? When you receive cash, you will debit which account are you debiting? Which account will you debit to? Which account will you debit?
Cash.
We debit our cash, then we credit our disposal account. So the same date or receive if it is actually on credit, it will be receivable account. Are we together? It will be what? It will be what? Receivable account. So since that is on we've received our cash, so you say cash, how much? 300,000 naira. So how much is going to our POL? How much is going to our POL? Profit or loss? Or loss. So that will be our total year. So 800,000 naira minus take away 800,000 naira from 837. What do you have?
37,850.
So we have 37,856. So we have 37,856. So that is our profit. That's the gain. You know, this is profit. But once we debit this side, Then our statement of POL 2023, it will just be it will be on the credit side, which is our income. We add it as part of our income for the period. It's going to be our income. So 37,856. So POL. Then it's coming from, this one will now be profit gain. This will be gain on disposal. On disposal. Are we together? So any question? Any question, please? Any question? So that's all about disposal, and everything about for your level. That's all about. Then we also have revaluation. Revaluation occur whereby at a particular point in time, we look for the market value of our assets, the fair value of our assets. How much can we sell these assets at this point in time? Are we together? So then for this level, we are to stop at disposal of our assets. Do you understand? Because when you the more the more you go in accounts, the higher it becomes. So when we get to revaluation of assets, we will be looking at revaluation gain or loss. Now let's quickly look at a situation whereby we now have 200,000 naira. We sold it for 200,000 naira. So how much will be our this thing? What will be the difference of this? You know, it can be profit again, abi? Hello? 800,000 naira is higher than 73856. So what is our value? What is our value? What is our gain on disposal? What is our gain on disposal? 800 minus 737,000. Your calculator, please.
137,000.
It can be 137. This is our answer. How much do we have? 800 minus 737,856. Use your calculator. What do you have from your calculator, please? What do you have? Oh yeah, press your calculator now. Oh yeah, I need your response. So what is our value? Oh yeah, what's the value? Are you there? I need your response. Oh. Hello. Hello.
62,144.
62,144. So it won't be here. So same date. This will now be loss. Profit or loss. Then 62,144. And we have I hope it's clear. So these two scenarios. So let me quickly provide you for that of gain. This will be for loss. So that when you are reading, you quickly understand what this profits 300. And we have 37,856. Clear? So this is for profits gain on disposal. This is our gain on disposal. Then this is loss on disposal. Do you understand? Do you understand? Hello?
Yes.
Good. So we'll move. Let's move to the next thing without wasting much of our time. So I want us to achieve a lot. So we've talked about disposal of our assets. Then now let's quickly explain what what assets non-current assets register. Non-current assets register is a record we use in keeping records of our non-current assets for us to track the to track all our items of non-current assets at the end of the what at the end of the period. It gives us information on it gives us information on the items we have for our property, plant and equipment. So, and what are those things needed? Now, like what we have here, non-current assets register is used to record information about a business non-current asset. It gives us information about those it gives us information about non our about our business non-current asset items. And what are the items being found for our non-current assets? It includes one, property, plant and equipment. Property like land and building, plant and equipment, furnitures and fittings, motor vehicle and so on, computer equipment and other equipment. So, and what are the information needed? Number one, we need the description of the assets, the items to be included in our non-current assets register. Description of our item. Which item do we have? Let's say property, plant and equipment. The date it was actually acquired will be needed. The cost, the historical cost of our assets is part of those things needed. Then how do we fund this? How do we get it? Do we borrow money? Is it that we borrow money to buy this asset, or it was funded with what? With our own cash? So you have to state it. Then depreciation charge for each accounting period will be needed. The carrying value, the carrying amount of the asset at the end of each accounting period will also be what? Will also be needed. Then the date of disposal, that's the date at which we dispose of our asset. Then details of the what? Disposal. How do we dispose it? This also will be what? Will be needed. Then the gain or loss on disposal also will be needed. Then the location of the asset. Some businesses, they will tell you the location of the asset. Let's assume they have different branches and one head office. So they need the location of what? Of the asset. Then the asset servicing regime to help in its maintenance will also be needed. Okay, how do we maintain this asset so that it will what? It will actually what? Last longer. Like let's take for instance generator. You know, sometimes they need to service generator, change the oil so that the engine oil, so that the generator will not what? Will not get spoiled at a shorter period of time. Yes or no? Likewise, they need also fuel. They need to change the plug and other things. They need to do the regular what? Regular servicing of what? Of the generator. That one is also what? Important. Do you understand? So those are the things needed. Then this is the typical example of asset register. As you can see, we have non-current asset number or non-current asset code. You give a code to each of your what? Non-current assets. You can use it based on the name of your organization. Like, let's assume you are working with food co. You can just say food FCO slash NCA, that's not current asset, slash 001. Are we together? So that when you are looking for FCO, which is food co slash non-current asset slash or equipment slash EQ, when you use EQ, they know that you are talking about what? Equipment slash the code. The code will tell you, okay, this is the actual what? This is the actual asset you are talking about. Are we together? Are we together? That is about that. Any question? Any question, please?
No question.
So now let's move to the next thing. We have another thing to look at. And then we move on. Asset coding. That's attaching identification number to your item of property, plant, and equipment for the sake of what? Identification and verification. So we need it as a control against theft or against theft. Are we together? So let's move to the next thing. Without wasting much of our time, we move forward. We are looking at the next chapter. So let's quickly run through our listing so that you let me give this as assignment for you. You do the multiple choice question, then you send it to me. I gave you assignment, you haven't submit, you are yet to submit it all. Then your short answer. We can look at the short answer together. He said a company has premises worth 800 million naira, million li. An additional amount of 20,000 naira, 20,000 li was used to provide metallic gate for the building. The cost of the gate should be treated as what? How do we treat the cost of the gates? Are we treating How do we treat the cost of the gates? How much are we treating? Now, the following information, okay, how do we treat, how much how much will be the total cost of our assets? Is it 80 million naira or 20 million, or 80 million and 20,000? Which one which one do we recognize as the cost of our assets, of the building, rather, or of the premises? I need your response, please.
20,000.
It will be 80 million and 20,000 naira. So that's the total cost. We need to also what? We need to incorporate that 20,000 naira because it's part of our cost the cost of bringing the asset to its what? To its usage. Are we together? To its present location and condition. Are we together? So any question? Why we move to the next? Now, now they give us information regarding this. They said this asset was purchased on the 1st January 2022. Accumulated depreciation is 18 Lee. 18 million Lee. Then the depreciation rate is the depreciation motor vehicle cost, the cost as at the actual cost is 50 million. The accumulated depreciation is as at the 1st January 2020 is 18 million. 18 million. What is the carrying cost? Let's determine the carrying cost as at 1st January 2022. What's the carrying cost? What is our carrying cost? Oh? What is our carrying cost? Oh? So you minus 50 million from 18 million. What do you have? Oh yeah, now
50 million minus 50 million is 30 million.
18 million minus 50 million. What do you have?
I said it's 30 million.
30 million. 80 million. And 50 million minus 18 million. Oh yeah, minus it. It's not correct. So what do you have? I need your response. So
32 million.
32 million. Now, that's the carrying amount as at 1st January 2022. Now, what will now be the depreciation charge? That's 32 million times 20%. What's 20% of your this thing? Twenty percent of your oh yeah now. 20% of 32 million. What do you have?
6,400,000.
That's 6,400,000. That's your depreciation charge for the year. Now, what will be the carrying amount at the end of the period? At the end of the year? Your carrying amount at the end of the year?
25,600,000.
How much?
25,600,000.
25,600,000. So that's your carrying amount. So the next question. What's the value of a non-current asset is recorded in where? The value of your current asset will be recorded in a what? Where will you record your value? Where will you record your value, please? Oh yeah, where will you record it? Is it in your statement of financial position or statement of your profit or loss? That's what they need. That is what is needed. Oh yeah, now. Where will you where will you record the value of your, let's say, the carrying value of your non-current assets when you want to prepare your financial statements? Oh yeah, now. Let's talk. Oh, where will you record it when you want to prepare your financial statements? I need your response. Where will you record your non-current assets? Where will you record it?
I don't know.
It is in your statement of profit or loss. Oh, sorry, statement of financial position. It will be recorded in your statement of financial position. But when it comes to depreciation, you record it in your statement of profit or loss as an expense. Do you understand? Do you understand?
Yes.
So that's about that. Now the provision made for the loss in value of non-current assets that is of a wasting nature is referred to as is 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 referred to as um, hmm, for not for wasting assets coming. That's depletion. Now that's depletion. Oh. This is the answer. Can you see? That's depletion. Do you understand? So let's quickly dive into the next topic before my battery run down so that we can achieve another thing. So let's move on to um the next topic. So when am I getting my this thing assignment? When am I getting it? Now we want to look at the adjustment for simple financial statement. What are those things we need to adjust when it comes to when we want to prepare our financial statement? And then before then we'll talk about the content of our the component of our what financial statement. The component of our financial statement. Likewise, we also look at we've also talked about the element of our financial statement. So what are the elements what are the elements of our financial statement? Oh yeah, element of our financial statement. Element of our financial statement. Element of our financial statement, please. Element of our financial statement. I need your response, please. Element of our financial statement. Hello? Oh yeah now. Oh yeah, element of a financial statement. I need your response, please.
Assets, liability, equity,
Uh-huh.
expenses.
Expenses, we have more, is 5. Is 5. Oh yeah, it's 5 now. We have assets, we have liability, we have equity, we have income, and we have expenses. What about components? Component of financial statement. Component of financial statement, please. Component of financial statement. Response. Oh yeah, component of financial statement. Component of financial statement. One of the components of financial statement is statement of profit or loss and other comprehensive income. Oya, mention others. At least we've said something about this. Oya, I need your response, please.
Statement of financial position.
Mm-hmm. Another thing. We have a statement of changes in equity. We have a statement of cash flow. Then we have notes to accounts. Statement of profit or loss and other comprehensive income. Statement of financial position. Statement of changes in equity. Statement of cash flow. Then we have notes to financial statements. Do you understand? Do you understand?
Yes.
So those are the 5 things. So now we want to look at those adjustments we need when we want to prepare our financial statements. The first one is allowance for irrecoverable and doubtful receivable. Now, sometimes when we are preparing our financial statements, we'll prepare it when we are preparing our financial statements. Um, we need to make some adjustments because financial statements, especially statement of profit or loss, is actually for that year. Are we together? It's for the year. Any information relating to the current year we are preparing for must be included in our statement of profit or loss and other comprehensive income. So it is now statement of financial position that we include the past years and the what current year. Information relating to the previous year and the current year. Are we together? Changes in equity is to just add add information relating to equity for the previous year and the current year before we now transfer it to our what statement of financial position. Are we together? What are those things that affect our what our equity elements, equity items? So we are looking at those things that affect what our equity. So with changes in equity, we are able to determine the equity value as at the end of the period. Then cash flow is all about how do we utilize our cash and cash equivalents. What information relating to both inflow and outflow of what of the company's cash resources. And when we talk about cash equivalent, we are looking at those items that can easily be what converted to cash. Are we together? Then you know cash is the what the liquid cash, the money the physical the physical cash we have at hand. Then also we also look at allowance for discount on trade receivables. How do we account for allowance for trade discounts? Allowance for discounts. We give discounts to people and we also receive discounts because in order to prompt for prompting of what? Prompting of payment, in order to prompt payment for the customer to pay on time. And you know that we have two types of discounts. What are the two types of discounts we have? What are the two types of discounts we have? I want us to go to, I want to take us to our previous knowledge before we now dive into the what? Current topic. What are the two types of discounts we have? Are you there? Hello? The two types of discounts
Cash
we have.
discount and trade discounts.
We have cash discount and trade discount. And you know trade discount is given in order to encourage cash what? In order to encourage bulk purchases of what? Of items, of our item, so that the customer can what? Can buy in bulk. Then cash discount is just to encourage you, is an allowance given for the sake of what? Prompt payment of cash. Are we together? So that's about that. Now let's quickly move on to what we have for the day. Now, we have accruals and prepayments. How do we account for accruals and prepayments? Accrual is given. Accrual, we have accrued expenses and we also have accrued income. Accrued expenses, they are services we've enjoyed being rendered, but we are yet to what? We are yet to make our payments. So it is a liability on the company. So what do? We debit the actual expenses account, then we credit accrued expenses, showing that we have a liability to what? To pay. Are we together? Now, when it comes to accrued income, we've rendered this service, but our customer has not make payments. So you add it as part of your what? As part of your income for the period by crediting your income. Then you see it as what? Then you credit your income account, then you debit your receivable, your accrued income. Are we together? That's the treatment on accrued income. Now, when it comes to prepayment is a payment in advance. You've paid, but you are yet to enjoy the service. You know, the payment is not for the current period, it's for the what? It's for the coming period. And we have two types. As we have for expenses, that's when we have for what? Income. For income, we also call it what? Unearned income. We are yet to earn it. So now, how do we account for this? We debit our prepaid expenses. For expenses, we debit our prepaid expenses, then we credit our expenses account. Yeah, we credit our expenses account because the money paid is not for the actual period. We credit our expenses account. Then when it comes to prepaid income, unearned income, the customer has paid the money to us, but we are yet to deliver the service, or we are here to deliver the goods to the what? To the customer. Then what do? It is a liability, we debit we reduce our income account because we debit our income account and we credit our prepaid income, or we call it unearned income. We credit it, we see it as what? As a liability on the company. Any question? So now let's quickly run through what we have. So allowance for recoverable and doubtful receivables. How do we make allowance for it? So what to do is what? What we do is to make a provision by reducing our receivables account. How do we reduce our receivables account? We credit our trade receivables account, then we debit doubtful debts. Are we together? We debit our doubtful debt account by writing it off in our P&L because we are not sure. Now we just make an allowance that, looking at the situation on ground, if our customer will pay or not. That's the purpose of making a provision, of creating an allowance for receivables, doubtful debts. Then we also have bad debt. Bad debt is also an allowance. It's also an allowance given to is also an allowance on irrecoverable debts. The debt we know that we cannot get again from our customer. So what do? We debit our bad debt account and we credit our what? And we credit our receivables account. Are we together? Are we together? I hope you are getting it. Are you getting it? Hello?
Yes.
Good. Now, let's look at how do we account for increments in provision for allowance for doubtful debts. How do we what? How do we account for that? We have a balance before, and then they now tell us that there is an increment. Now, if there is an increment in the provision for doubtful debts in the trial balance, debit amount of increase in our statement of profit or loss, and a credit accumulated provision for doubtful debts in the what? In the trial balance. So we now credit our what? Our provision for doubtful debts. We debit P or L, statement of profit or loss, and we credit what? Our doubtful debt, in which the accumulated one will be used to net off our trade receivables. Are we together? So we now the increment, the total trade provision we have will now be deducted from our trade receivable. Are we together? Are we together? Are we together? Oh, are we together? Good. Now, how do we account for decrease? We expected, let's assume we expected that it is our expectation that let's say at the beginning of the period, we've estimated, let's say 300,000 naira to be our provision for doubtful debts. Then it's now reduced to, let's say, 250. Now the difference of 250 or 50,000 naira is an income to us. Yes or no? Yes or no? So how do we now account for this? Now, what we do is we credit our statement of P&L being a decrease. We see it as what? Income. It is income to us. Just the difference between the opening balance and the what? And the closing balance. What we have, you debit it in your P&L. Then the new balance, which is the new provision we have, you know, the difference we have to be deducted from what we have at the beginning, which will give us the closing balance. So the closing balance will now be what will now be deducted from our trade receivables when we get to statement of financial position. Are we together? We credit our statement of, we add it as part of our gross profits because it's an income to us. Then we now debit, we now debit what? We debit our provision for doubtful debts. So when we now get to statement of financial position, we now deduct the new provision from our trade receivable. Are we together? That's how to account for that. Now, in a situation where we don't have any provision again, when we don't have any provision, you know, we make a provision that probably there might be a loss of a particular amount, and at the end of the day, all our customers, they pay off their debts. What do we do? The listing, you know, you know, our 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 accumulated provision for that two debts will be 0. So amount being paid, which is the provision at the beginning, will be the difference between the beginning and the end, which will be that amount. So we see it as our income. We add it as part of our what? We treat it like decrease in what? In provision for doubtful debt. So you add it with your gross profit, then you minus 0 from your trade receivables. Yes or no? Hello? You know, we now have 0 balance in our provision for doubtful debt. Then when you now take 0 from your trade receivable, you will still get your trade receivable. Are we together? Are we together? Because 0 is now our new what? Our new provision for doubtful debts. So now let's look at bad debts. They are irrecoverable debts from customers. So how do we account for this? We debit our P&L or statement of profit or loss, and we debit our bad debts or statement of profit or loss. Then we now credit our receivables account, trade receivables account. That's how to treat that. Are we together? Are we together? So this is what we do. We debit our statement of profit or loss, then we credit irrecoverable debt account in order to write it off. Then So that's how we treat. Like what we have here, we have trade receivables, allowance for doubtful debts, trade payables, gross profits, and the capital. So you now said, assume the following situation where there are we have increase in allowance for doubtful debts. Where is our doubtful debts? So our this 15% will be we apply it on our trade receivables. Trade receivables. Now, what's 15% of 500,000 naira? Oh yeah, what is this thing? Oh, I need your response. 15%. So we have 15%. 15% of the new provision for doubtful debts is 15% of. So we have new provision for doubtful debts. So that will be 15% of trade receivable. So how much is that? How much is that? That's equal 15% times 500,000. So what do you have? Oh yeah, calculate it from your side. What do you have? What do you have, please? I need your response. Oh. What is your value? Hello?
75,000.
So we have 75,000 naira. Old provision. What is our old provision? Old provision for doubtful debts. How much is that? How much do we have in our listing? In our trial balance, we have 50 abi. We have 50,000 naira. So we minus this from this. What do you have? 75,000 naira minus 50,000. What do you have? Oh yeah, now. 75,000 naira minus 50. What do you have? What is our answer? What is your answer? Oh,
120.
yeah, you are not adding you minus. You are minusing. Take 50 away from 70. From
25,000.
75 right now. What do you have?
25,000.
So we have 25,000 naira. So it is now this 25,000 naira. So what do you do? You say, so we have debit here and we have credit here. So you debit your POL, profits or loss, with how much? 25,000 naira. This is an increment. Then you now credit your what? Provision for that two debts. Doubtful debt with the same 25,000 naira. Any question? Any question? Any question, please?
No question.
No question. So now let's look at the next thing. Now they said we need to calculate an increase in allowance for doubtful receivables by 2.5%. The other one is from, we are moving from 50 to 75. Now, this one is now by 25 on 2.5%. So what's 2.5% of 500,000? We are to increase by, so this A, now B, we are increasing by, so it means we have to add to what? To the new provision. So B, so we are increasing by, so how do it means new provision So let's look for the difference for what we need to add. So that will be 2.5. We need to determine what we are adding to get our new provision of 500,000. How much is that? How much is that? How much is that? Oh, 2.5% times 500. What do you have?
12, 5.
So we have 12,500. Good. So now our new provision is so it's an increment. So what do we do? So with our increments, then before then new provision, I'm coming. So new provision will be
I have a question.
okay, with you.
Are we going to read 3 o'clock like this? I thought we were going to have a break.
Yeah,
Are we going to read 3 o'clock like this? I thought we were going to have break.
should we have break? It's because of the light on my system. The thing will soon go off and I don't have light where I am. So we will soon stop. We are not reaching 3 o'clock. That's why I'm rushing. I wait together.
Okay.
So we are not reaching 3 o'clock. Are you bored? Hello?
You can continue.
I ask you a question. Are you bored?
I'm not bored. I wanted to do something else. That's why I was asking. But we can continue.
Okay. Let's say by 2:30 we'll finish. Mass 2:30 we'll finish. So let's continue. We will soon round everything off. So next week we'll continue from here. We do preparation of our financial statements. We also look at the banking stuff. God should help us. I know it's not easy, but we will try our best. So we have the new provision will just be the addition of the old provision with the difference we just got with the increment. Do you understand? Increment, these are our increments. Increments. Are we together? So how much is that? 12,500 plus 50,000. What do we have? What do we have? Oh? You add 50,000 naira plus this. What do you have? Plus 12,005. What do you have? Oh, yeah, pick your calculator.
62,500.
Huh?
62,500.
62,500. Old provision will still be 50,000 naira. Abi? Then our difference will just be equal this minus this. So this is our increment. Increment. Then how do we account for this? As usual, because it's an increment, we treat it the same way we treat the other .1. So just bring your 12,500 here. But when you get to statement of your financial position, the 62,500 will be what you input, what will be deducted from your trade, what will be deducted from your trade receivables. Are we together? So that's how to account for that. Then we'll move on to what's the next thing. Now they said allowance for doubtful debt, doubtful receivable increased to, now this one decrease. Okay, it's also increment. It increased to 62,000 cedis. So how do we account for that? So how do we account for that? Oh yeah. How do we account for that? So they've given us the new provision, yes or no? Then we minus it to know our increment. We need to determine our increment. So what you will do is C. So what we do is the new provision, as usual. What is our new provision? Our new provision is 62,000 cedis. Abi. And then we have old provision to be 50,000. So difference is, what is our difference? What is the difference of 62 and 50,000 naira? What's the difference, please? Are you there? So we have 12,000 naira, 12,000 cedis. Don't, anytime you are doing your account, don't forget your currency. Do you understand? It's because I'm using this thing. I'm using Excel sheet. If I'm to use a board, I must always include my I must include my this thing. I must always include my currency. Which currency are we using? In your own notes, always put your currency. It is very, very important. It is very, very important. So we have 12,000 naira. The same way, Abi. Yeah, in the same way. Any question? The best thing is just understand the question, then you treat it as they want. So the next thing, D. What is our D? They said allowance for doubtful debt reduces by 10,000 cedis. We have 50,000 before and it reduced by, it means we have to reduce 50,000 naira, 50,000 cedis by 10,000. So what will be our new provision? So here it is reduction. So we say new provision and old provision. Bam. Shoot. Old provision. What is our old provision? Our new provision is what? We are to reduce 50,000 naira by 10 50,000 cedis by 10. So what will now be the new? That will be 50,000 minus 10. What do we have? Will be 50,000 minus 10. So what do you have? What is your answer? What do you have as your value? Oh yeah, I need your response, please.
40,000.
So we have 40,000 cedis. Do we even have cedis here? I think we should have. It's just that I need to start searching. I can't find any Ghanaian cedis. Yeah. When we have Nigerian this thing, no Ghanaian cedis. Eh? Is there maybe I can't find it. You should any currency you have in your question, always include it. So old provision is this. One will minus so this is our reduction, decrease. Or reduction, decrease. Then how do we treat this? So you can't treat increment like a decrease. So your 10,000 of the year, then your new provision will be here. So now, if you are to reduce your trade receivables, you are reducing it with 40,000 cedis. Are we together? Are we together? When you get to statement of financial position, for you to get the trade receivables that will be in your statement of financial position, it will just be what you have in your trial balance, which is 500 cedis, 500,000 cedis minus 40,000 cedis. Do you understand? So that's about that. Then next thing. So next thing, oh yeah. They said allowance for doubtful debt reduced to 7.5% of trade receivable. It means we are to reduce from 50,000 now to 7.5% of our trade receivable. So we need to calculate the decrease. We need to calculate our decrease. Then we need to calculate our decrease first. This is E. Let's calculate our decrease. Decrease. Our decrease, our decrease will just be wait. They said allowance for doubtful debt will reduce to, that will be our new what? Our new provision. So before we now calculate our decrease, so we need to determine our new provision. So we say new provision for doubtful debts will just be equal 7.5% times times 500,000. So what do we have? What's 7.5% of your 500,000 naira? Because we are using this on trade receivable value. So what is the percentage? What is the percentage, please?
$37,500.
So we have 37,500. So old, old provision is this. It's still our usual splitting. So increment, decrease, it will be a decrease, yes or no? Decrement will just be abi. Our decrease is this. Then the treatment will just be so. You know, when we have decrease, is an income to us, yes or no? It is an income to us, abi. It is an income to us. So, you know, when it comes to income, where do we post it? Where do we post our income? Oh? Where do we post our income? Where do we post it? Oh? I need your response. Where do we post it? Oh? So since it's income, our income will always be any increment we have in our income, it will always be on the credit side. Don't forget this, please. It's very, very important. So while any decrease we have on income, it will be on the debit side because our income has increased. So we credit our what? POL, then corresponding entry goes to our what? Provision for doubtful debts. Are we together? Are we together? Are we together? Oh,
Oh, it's you.
so that's it. But let's quickly finish this, then we'll call it a day. Then we'll continue from here. Now they said decrease in allowance for doubtful debt by 3% of it is by, not to. We are not bringing it from 50,000 to 3%, but it is what we are to reduce it by 3%. Are we together? Are we together? So what will now be our decrease? We need to determine our decrease in value. So this, we are moving to F. So decrease value. Our decrease value will just be 3% is our decrease. Abi. So we just say equal 3% times. What is the value of our trade receivable? What is the value of our trade receivable, please? Value of our trade receivables. Oh yeah, I need your response, please. 3% of our this thing is how much? 3%.
15,000.
How much? That's 15,000 naira. Abi. So we now say, what will be our new provision and what will be our new provision? Our new provision will be uh our new provision will be that will be, you know, what provision is 50,000 naira, abi? So new provision will just be you minus old provision from the decrease you have. So what do you have? 35 minus this, we have what? We have 50. So you can, it will just be just minus the minus, then you still have your decrease as usual. Abi. Then, so I want you to do this one. So how do we record this? How do we record? Which one is going to the debit side? Which one is going to the credit side? Which one are we debiting? Which one are we debiting? I need your response. Oh.
The profit.
Which one are we debiting? Because it's decrease.
Profit or loss.
And how do we treat profit or loss account? Profit or loss. Statement of profit or loss. Are we debiting or crediting?
Debit.
We debit when there is decrease. The 15,000 naira the 15,000 naira decrease value. Are we debiting it in POL or we are crediting it? We said decrease is an income to us. Are we debiting it or we are crediting it? Oh yeah, now this thing you did not get it though, to be candid. Look at the previous example. This is it. This decrease. What do we do to our decrease? Is an income to the company.
Decrease.
We debit what?
I said credit.
It will be on the credit side. So 15,000 naira will be on the credit side. Then we debit our 15,000 naira for provision to reduce it by 15,000 naira. So the last one, going forward, now they said allowance for doubtful receivable are no longer what required. We don't need it. So what should we do? All the provision we had at the beginning of the period, they said we need to write them up. That's the plus for the company. So it means all the provision G, all our provision, that's a decrease. We also treat it as what? Decrease. Abi, the whole 50,000 naira, the whole 50,000 cedis will be treated as what? As an income. So we don't need to do new provision, the new provision will be at what? Zero. Yes or no? The new provision will stand at zero. Yes or no?
Yes.
So now, this is also a decrease. What should we do? Now, is an income to us. You just say 50 is an income, 50,000. Then it means we've written off our what? Our provision. Do you understand? Do you understand?
Yes.
So that's how to treat that. Now, they now tell us the next thing is that a customer with outstanding balance of 80,000 cedis from our trial balance is declared what? Bankrupt. Are we together? Is declared bankrupt. Is declared bankrupt. Is declared bankrupt. Is declared bankrupt. When is being declared bankrupt. So how do we go about it? Eh? So it means we can't get that 80,000 cedis again. Abi, that's bad debts. So what we need to do is what? We come here. H. So what we do is bad debts. We recognize our bad debts because we can't get it. Someone being declared bankrupt. Is it possible for that person to pay? Eh?
No.
No. So we are not expecting the money from him again. So what do we do? So we come here. Our bad debt, we debit bad debt or bad debts account. We debit our bad debt account with 80,000 cedis. Then we credit our what? Trade receivables account. This is not a provision. We just credit our trade receivables. Trade receivable accounts. Any question? Any question? Any question?
No question.
So we need to prepare our minds. Next week, we have to finish up all the topics. God will help us. So let me see what the next thing we need to do. If we still have any other thing. We are done with provision for doubtful debt. So the next thing we will be looking at is how do we account for discount. Discount is an allowance. Discount allowed is a form of reduction in the price in the value of our receivables in order to encourage prompt payment of what? Prompt payment of uh, our money in order to encourage the customer to pay on time. So now how do we now account for it? Now the first thing that should come to our mind, since discount is a loss, it is a loss on the company. We see it as a loss. We are expecting the customer to pay us 100,000 naira. Then at the end of the day, we tell the customer that okay, if you can pay within a specific time, we will give you, let's say, 5% of 100,000 naira. So what are we expecting from the customer? How much are we expecting from the customer? Hello? How much are we expecting like that from the customer? Oh, how much are we expecting from the customer? A customer that purchase that purchase goods, some goods worth 100,000 naira from us, and we tell the customer pay 95% of 100,000 naira, we give you a discount of 5%. So how much are we expecting in value?
$95,000.
We are expecting 95,000. Then we give the customer how much?
5,000.
We give the customer 5,000 naira. So that 5,000 naira will be recorded as our discount, um, will be recorded as discount allowed. Are we together? We record it as discount allowed. While while we debit our discount allowed account, then we credit our receivables because we are using the discount allowance to reduce our what? To reduce our trade receivables. Are we together? So next class we look at um a question on this. So I think we'll gain one or two things, then we'll move from here in our next class. So any question?
No question.
So when are we meeting again? We are meeting tomorrow for communication skill. That one is sure. So another So, should we make it Monday or Tuesday? That Monday is somehow. God will help us, sha.
On Monday.
On Monday. Let's see how it goes on Monday. 8 p.m. as usual.
Yeah.
I believe we are moving
Let's
forward. Yeah,
by God's grace.
no wala. See you tomorrow for communication skill class.
Okay. Thank you.
You're
Bye.
welcome. Then we'll continue from here. Before we now move
Okay.
to, we'll just be fast with it. We also solve some questions. No problem. Thank you for joining the class. Enjoy the rest of your day.
Thank you, and you too.